9:32 a.m. Pacific Standard Time, 11/9/2013. We have before us today the Nasdaq Composite. One of the things that I'm going to show everyone was that we were due for a pullback. Let's just do a little quick history very quickly, and let's take a look at the last dip, or every dip that we had throughout the calendar year. We rallied up, we pulled back from overbought levels, and we rallied up, and we met new highs all the way up here. This Nasdaq Composite, just so people know, is at very, very high levels. And when we take a look at the current cycle, I'm going to draw a trend line here for the new MMTs. This is where we said we were going to have a pullback before. We did. That was on 10/9, the October pullback phase. We rallied up, we made the highs, but here's the thing that was very alarming. In the Nasdaq component, in the Nasdaq 100 especially, the high-flying stocks such as Priceline, Google, Tesla, all of these other high flyers like LinkedIn, there are several of them that have pulled back severely. And we had on 11/7, the Nasdaq fell 83 points. 83 points intraday. What did that equate to? This red bar was one of the heaviest selling days that we had here. That was 83 points down. Friday on 11/8, we came right back in and we went 50 points higher. I just want people to know that we still remain below the 10-day moving average. We're slightly above the 20-day simple moving average. The 50-day moving average on this index is going to be 3804. That will be eventually at the 3800 level where this big bull run, and this time of year, when we take a look at a bar over here, we had one day 78 points down. This was back in the October correction. Here, this is one of the bigger selling days that we've had on 11/7. When I go back and take a look at calendar, when we talked about a big down day in the Nasdaq Composite back in August, and those live videos are on the site, that big down day was only 56 points. I just want people to be aware, when we see an 83 point down day and a 50-day point up day reversal, that there was a lot of distribution, and a lot of the high flyer stocks in the Nasdaq 100 component, and I will be happy to show the Nasdaq 100 component on a weekly level. I'll throw that in here with the very same video. This Nasdaq 100 has had an extreme bull run on a weekly level. But I want to show that the top leadership stocks have pulled back. This is a major topping pattern on a weekly level. The moving averages that people need to be concerned with will be 3186 on a 10-week. That is below the market. So beware that we're still in a topping pattern and we're extremely overbought in this Nasdaq 100 on a weekly level. Back to the daily level is that the counter trend in the Nasdaq 100 stocks that have been the best performers really across the board in this calendar year are in a distribution mode. People are taking profits. People that made these big gains, the institutions, they're selling. And they're selling in these highs up here. And basically, we're almost through the earnings season. There's been a lot of volatility, and what I can say is to be aware that when this MACD reading right here that I just drew the trend line when we were making these peaks, it's coming down some because these were absurd overbought levels up here. That's why we had that big daily drop. Beware that the Nasdaq Composite itself is quite different than the Dow, and it's different than the S&P 500. Your bigger volatility remains in the Nasdaq Composite and the Nasdaq 100 stocks, which are the best ones for trading. whether you're in a market maker level, that's what we teach, and or you're an investor or semi trader, you need to know when to sell. Buying the dips, it's a stock picker's market. We're going to end down the year and there's going to be more selling. This is not an opportunity to be buying at the highs, and we said that a week ago. And right after we said that last weekend, you had a big, big, big drop, and you had that counter rally. So until we consolidate above the 10-day simple moving average, I will say one thing for sure, that on this particular bar, we're not nearly as overbought on a daily level, because we're not. When we were over here, we were at 94% DS. Here, we're at levels where we worked some of that, because when the amount of selling that happened on this day means that that worked off some of this overbought moving average convergence divergence. It worked off quite a bit of the overbought territory. So that means that we can still make a new high. But beware that people are chasing year-end performance in this bar and distribution by the institutions we're selling in this bar.